Good morning, traders. Today's big market moving event is likely to be the release of the CPI inflation data for the US that's coming a little bit later on in today's trading session. And this is obviously an important one to watch, again, as the Federal Reserve have been closely monitoring inflation along with the employment situation to decide what to do about their monetary policy, whether they should tighten in the coming months or not. Those are obviously two parts of the Fed's dual mandate. Now, on Friday, we saw a massive increase in non-farm payrolls for last month, so a high inflation reading would give us even more confidence that that taper announcement is coming very soon. And some Fed officials have publicly said that they would support a tapering announcement in the next couple of months. The signs of this could come as soon as the Jackson Hole meeting later this month, as we've discussed before, but that's more likely to be sort of a hint towards what's coming rather than a full announcement. So the expectations for last month's CPI reading, which we'll be seeing today, are still relatively high, but also expected to be slowing down from June's 13-year record high. So the Fed are still likely to stick with the message that inflation is transitory, whether this reading is high or not, with some of the biggest drivers behind this temporary, or in their words, temporary rise in inflation being energy and the prices of used cars. So energy prices have rocketed over the past year. WTI currently is around the $60 to $70 mark, just under double last year's price. It's had a bit of a sell-off recently, but still quite high compared to last year. We've also seen high prices and limited supply of things like liquefied natural gas and thermal coal, which are causing more pressures there. However, as long as the gains in energy prices do begin to slow down, then it should also fade in the year-over-year inflation readings. Now, used cars have also been in a similar situation. The economy was reopening and there was a shortage of new cars due to problems with semiconductors, and that led to a rise in prices. And in fact, used cars accounted for a third of June's inflation gains. So it's factors like these that are unique to the pandemic which lead the Fed to believing that inflation is transitory, and why they shouldn't rush into policy tightening too soon, as that would obviously harm maintaining their 2% inflation target over the medium and long term and stifle the growth in the economy. Now, the timeline for what they consider to be transitory or not is still unknown, but some of the biggest problems like the semiconductor shortages and supply chain disruptions are expected to reduce early next year, but that's still quite a while away. But if we look at inflation over a period of 2 years instead of just one, it's actually trending a bit higher than normal at the moment. So I think all in all, the announcement for tapering could be justified relatively soon, with tapering to begin towards the end of the year. And I think for today, anything above the 0.4 expectation for inflation will make that even more of a certainty. So if we do beat expectations, especially by quite a wide margin, watch for major gains in the US dollar and a drop in equities. And speaking of equities, I've got the Dow here on screen. This is the 4-hour chart. And this is the same trend line I've been showing you over the past few weeks, and you can see how it's still continued to hold up. And we're right at the tippy top there. So if we do beat expectations, it's quite a clear area for the price to drop from all-time highs. We could pick up like a very tight risk and a huge potential reward there. Likewise, if it's under expectations, if there's a sign that maybe tapering is going to be delayed a little bit, then maybe we'll start to see it edge out beyond the sort of the range that it's been stuck in for a little while. If we look at the daily chart, you can see it's just edging its way to all-time highs, but still sort of caught in its consolidation around here. So I think that is the Dow that I'm going to be following today rather than currencies, particularly after that inflation release. And that's all for now. So let me know in the comments what markets you're following, how you see things going. Hit the like button if you found this useful. And if you want to know more about how I trade, check out the free training that's linked in the description. Thanks for watching. See you in the next one.